2023 was a tricky year in the market for everybody, not just us. We did win an award, the Commercial Agency of the Year. That was fantastic. We tried to create an approachable brand, we feel. We went about creating a new subsector of the market that we called the sub €20 million sector. I think that was one of the things the judging panel picked up on. It means that we're doing something right, and to be recognised by our peers in the property industry, I think is a good thing for us. COVID certainly was a game changer for every real estate company, I feel, in Ireland. It was a bad year last year, particularly, I would say, for the office market, the occupier market, and I would say for the investment market, both the institutional market and the sub €20 million market. The feedback we were getting from our European colleagues was that, look, Ireland needed to get a little bit cheaper. The return on investment you get over here is less than what you might get in France or Poland at the moment, so the pan-European investor is investing in those countries.
This particular period in the cycle reminds me an awful lot of that 2011, 2012. It was a macro issue in terms of finance in the market, and there wasn't really a sector untouched. Different sort of situation, but in terms of the cycle, in terms of values, this is more inflation and interest rates, but similar kind of opportunity.
The market needs to understand pricing levels, and that's the issue at the moment. Vendors have an expectation on price, and the buyers who are coming in have a different expectation. And the problem now is those expectations aren't matched.
Retail has found its level over the last year or two. Industrial, in terms of the structural issue in the Irish industrial market, will find its level quite quickly. Now we have the doubts and uncertainties around the office occupational market. That particular market is still in a matter of flux until both the occupational side and the sustainability and the cost side are really clarified.
The current health of the office market and how it performed in 2023 it was challenged. There was 1.45 million square foot of office take-up for the year. So in peak years leading up to COVID, that would have been 3.5 to 4 million square foot. A lot of companies are still in a position where they're a little bit unsure of their future needs, and as a result, they are taking short-term views. The technology sector have gone completely from the market, and that's had a twofold effect. Not only were they not taking up space, they've also put a lot of space that they had taken up back into the market. So that's led to quite a lot of supply.
Right now, as things stand, there's about 7.5 million square feet of space available on the market. So the vacancy rate in Dublin is above 15% right now, which is very, very high.
When all that grey space in the market, it made things difficult for traditional landlords who are offering Cat A space or landlord spec space. The tenants have to go in and spend upwards of 150 or 200 euros per square foot fitting out, which is 3 to 4 years rent, which is significant. A lot of companies have changed the way they're working. Some have gone for lower densities within the offices. They're using the offices differently in terms of additional breakout space, additional amenity space, basically trying to encourage people back in.
There is a movement now to get people back to the office. That's definitely something that I'm hearing on the street and anecdotally, and talking to senior people in businesses. They want to get people back to the office, and I think that will improve things.
A lot of tenants are focused on ESG, and by ESG we're referring to environmental and social governance. What tenants and landlords look to aspire to is a BEO rating of B1 or an A rating. Over the last 10 years, all developers they've redeveloped new space that fit within the most desirable category. They were typically built with floor plates of minimum 10,000 square foot. So you now have a position where 81% of transactions are happening in the sub 10,000 square foot category. In 2023, only 24% of lettings in the office market actually had a BEO or B1 or higher. The stock just isn't there to satisfy all those tenants. It is improving in time, but it's going to be years before that equates.
2023 was definitely a year of uncertainty, and the interest rate hikes didn't help that really. It was just one interest hike after another, which then resulted in no transactions, which then resulted in trying to value things. It's very hard to form an opinion on rental values and the yields to apply. And in valuations, you need your market evidence there in order to form your opinion. There wasn't too much new lending really going on. The likes of your alternative lenders, they were still lending, but at a lot lower kind of volume.
QRE have tracked the sub €20 million market for over 7 years now because we believe it is a true barometer of the real investment activity within the commercial real estate market in Ireland. 2023 was without a doubt a very, very challenging year. The total investment turnover was approximately €450 million, made up of some 81 transactions. If we look at the years pre-COVID, say 16, 17, 18, 19, you're looking at investment spend in the sector of anywhere between 700 to 950 million euro. So it is a dramatic decrease. Our data shows that about 40% of all investment spend was allocated to retail, 30% to industrial, and about 20% to the office market. But what's most interesting, I suppose, is that less than 5% of all investment turnover is allocated to the PRS. Effectively, investors don't believe that the rate of return is reflective of the risk. So if I can invest my money, be it my €1 million or my €2 million or more, into an investment bond or to a government treasury at a similar rate, well then why would I directly invest into real estate, which has obviously much higher associated risk? There's also other factors, I suppose, such as the potential legislative and political changes in the event that there is a change of government. And that is a very, very real impact on investors' thought processes in this asset class.
2024, let's see what happens. We're not really sure how the year is going to pan out. You know, there is talk of interest rates stabilising now and coming back a little bit. That would be a good thing for us. It might put a bit more certainty on price.
Talking to the banks, they seem this year they want to lend more and they're ready to lend. It's just a matter of kind of the right things to come along.
For 2024, the institutions, I don't think will be as big a players as they have been previously. The private Irish investor will still be key. There are some very good and talented asset managers in Dublin backed by new private equity, and I think they will be seeking for the next 6 to 9 months to exploit this market.
There are a lot of new inquiries out there, large-scale inquiries for the office market. Whether they actually take occupational space is another thing. There is 7.5 million square feet of available space in Dublin right now, so hopefully some of that will be taken up this year.
We expect prime offices with good ESG credentials, and particularly those with fit outs to do well and hold their own. Some of the more oversupplied suburban locations, the likes of Dublin 18, where there's upwards of 1 million square foot of available space. We expect to see a little bit of attrition there. There's going to be intense competition amongst landlords.
We always have been and will remain to be an advocate of the retail sector, particularly in terms of well-let high street retail. We think there's a good rebound in that. And additionally in well-located defensive retail parks.
I'm cautiously optimistic. I suspect we may have hit rock bottom this year. The fundamentals of the economy are good. We are set for a rebound. I don't think it's going to be a massive bounce. I think it'll be a slow, progressive bounce back. I think that's going to be welcomed in the market generally.